who has been of so much support to the DSS committee in diverse ways. I'm talking about the royal papa, the Reverend Dr. Ransford Kwabena Ewuku-Gyampo. Papa, God richly bless you for the flyer you did for us. We thank you so much. Then I'm humbled to introduce to you the first gentleman and the Bishop of the North America Australia Presbytery, who happens to be our chairperson in the person of the Reverend Christian Bequin Apentin. Papa is currently on an equally important assignment in Ghana, and so he is being represented by the acting chairperson of Presbytery, who happens to be a veteran chairperson himself, the district minister of the New York district, and also the minister in charge of Manhattan Congregation. I'm talking about the Reverend Dr. Kwabena Ofosu-Addo. Papa is my district minister, and we in the New York district are very proud of him. Papa Nom, officers of the Presbytery, we are blessed to have you present. We say God bless you for honoring this invitation to come and listen to this program and also to support us. We will listen to a brief statement from Chairperson, that is Papa Ofosu-Addo, after which Papa Adjei will take over and introduce his team members. So, Papa Chairperson, I humbly... Yes.
Thank you
God
so
bless.
much, Mommy.
Amen.
We are always delighted to have this session
Amen.
because it is a time for that she has been prepared to enter into the season of taxes. And so it is always a delight. And I think that DSS has done this so well, and therefore it has become an annual event. I'm only praying that it will not just be a ritual, but we will take the education very serious. And so we are blessed, we are honored, and we want to thank the club for putting up this program and then also making sure that the programs come up as it is planned. I want to thank God for Mama Doris for the passion at which she brings this program to bear. Then also the insight and the education, she wants the DSS to bring to the knowledge of the members of the church. In fact, it is that serious when you live in ignorance, so you don't know the background in what you are supposed to do. And therefore, it is always a privilege to have the technical expertise. Like our brother, in fact, I'm hearing it once again that is a decorated military person who's retired from the military. And I know that Adjei is passionate about so many things, so many things, and you will always not be tired listening to him. And there are a lot of things in his sleeves and to great education. He's very passionate about the praise of God, and he's also very passionate about IRS devices. And you know, I had in the early introduction, the moderator of this session, that we don't fall into the hands of the IRS. In America, you can evade all other things, but you can't evade taxes. If you do that, you are in trouble. So with that much, I went with the speakers as the election, in charge of the election. Right. We are blessed to have this session.
Thank you very much, Papa. And it is a privilege to come and present to you during this task forum for the North American Australian Presbytery. And this is one important event that happens once a year in everybody's life, as long as you live in America. One thing that we always make a joke about is you eat your vegetables and you pay your taxes. Those are the two healthy things that will keep you up going in this country. I have wonderful staff with me that are going to help to present to you. Number one, I have Miss Nagwa Awad, who is with the Stakeholder Partnership Education and Communication Department, also known as SPEC. And then I also have Miss Bailey, Bethsaida Bailey, who is the local taxpayer advocate with the Taxpayer Advocate Service. And then I also have Miss Claudette Mathis, who is also the local taxpayer advocate serving the Brooklyn, Queens, Staten Island areas. And she's also from the Taxpayer Advocate Service. Ms. Bailey jurisdiction covers Manhattan, Bronx, and then some parts of going to White Plains. Going to White Plains direction. Can you hear me?
Yes.
All right. Yes, Papa, we
Okay.
can hear you.
Going to White Plains direction. And a stakeholder liaison partnership in education. I'm also from that department. I'm the territory manager for the New York City territory. My territory spans the New York City, and then also the state of Maine, the state of New Hampshire, and then the state of Vermont. We handle all the VITA sites in those areas. And so without wasting further time, I'll call on Ms. Nagwa Awad, who's going to be our first presenter, and she's from the SPEC department. Nagwa, take it away.
Hello, everyone, and it's a privilege for me to be here. I'm honored. This is my second year doing this. So I am going to, I know we're kind of crunched for time, so I'm going to go ahead and share. It says host disabled participants screen sharing. Would someone be able to give me access for screen sharing?
Can you humbly try again, please?
Sure. Okay. So it worked.
Thank you.
Let me find the correct screen. Okay, so can you see the PowerPoint?
That's it.
Oh, yeah.
Okay.
There we go.
Okay.
Mhm.
Okay, perfect. All right, so as George said, I work for SPEC, which is Stakeholder Partnership Education and Communication. It is part of CARE under the Department of Taxpayer Services. And tonight, I'm going to be talking about VITA TCE and taxes. So these are the topics we're going to cover for tonight. I'm going to tell you a little bit about SPEC and VITA TCE. I'm going to go over the new tax laws for 2025, including the Trump account. I'm going to talk about EITC. If there is time, and George, if you can let me know if I have time at the end, I will talk about individual tax identification numbers. So what is SPEC? SPEC is the education and outreach function of the taxpayer services. Clients include lower income taxpayers who file individual tax returns like forms 1040, also 1040 NR non-resident. SPEC is always looking for groups that share the same customer base so that together we can serve the low-income community. So underneath that is VITA TCE. VITA is the Volunteer Income Tax Assistance Program. It offers free tax help to people who generally make $69,000 or less. So the 69,000 is the threshold for 2025. It increases every year. Also, for persons with disabilities, the elderly, and also limited English-speaking taxpayers who need assistance in preparing their own tax returns. IRS certified volunteers provide free basic income tax return preparation with electronic filing to qualified individuals. TCE is for the elderly, 50 years of age and above. They welcome everyone. One of our biggest participants is AARP. They are the largest contributor to the TCE program. So to find VITA TCE sites, they're generally located at community centers, neighborhood centers, libraries, schools, churches, and other other locations. To locate the nearest VITA site, you can call this number, or you can go on to the irs.gov website, irs.treasury.gov/free tax prep. And you enter your zip code and it will list all the participating free tax filers in the area. To locate the nearest AARP TCE tax aid site, you would call 888-227-7669. So how can I get involved? Because we're always looking to expand the program, because the bigger the program, the more people we can serve in the community. There is one of three ways people can get involved. You can, as individuals can volunteer. They would get certified for free. We offer free training, free certification, and then they can volunteer to prepare tax returns at one of the VITA sites. Or a location can become a site that would be affiliated with an established VITA TCE partner, or they can decide to become a VITA or TCE partner. And there are different types of partners, from traditional, which is in-person, people walk in with their W-2s and tax paperwork, and then you would help them fill out tax returns, all the way up to you can offer to help prepare taxes virtually, or what's called FSA, which is self-assist, or anywhere, any combination of that. To register to become either a volunteer or a partner, you would go on to this website, freetaxassistance.for.irs.gov/s/sign-up-form, or you can go to irs.gov and type VITA in the search bar. You will get that. You will see that on the page. You would click on IRS Tax Volunteers and you can sign up there. Once you click on that, it will give you the option to either sign up as a volunteer or sign up as an organization. So the important part about tonight are tax law updates. OB3 stands for One Big Beautiful Bill. And I'm also going to talk a little bit about the Trump account. I just want to point out that this is fluid, it's changing, and we're getting updates. So the information I'm giving you is our updates up to this morning. As of yesterday, we got an update. We just got an update that kind of reversed something else that they had produced. So this is update up to this point. This is the latest. This is what I'm going to be going over time in non-taxable tips, enhanced deductions for seniors, auto loan interest, and the Trump account. I just picked the important things about the changes for this year. So overtime. It's effective for 2025 all the way through 2028, individuals who receive qualified overtime. And by qualified, what we mean by that is For example, if someone makes $10 an hour and then they work overtime, they work an hour overtime, they get paid $15 for that hour. The $5 is not taxed, but the $10 is taxed. So that's what a lot of people are confused about. So what we mean by qualified, it's the half portion of the time and a half compensation. The maximum annual deduction is $12,500 for an individual or $25,000 for joint filers. Deductions phase out for taxpayers with a modified adjusted gross income over $150,000 for single filers or $300,000 for joint filers. Now, for this year, employers will not be penalized for not including the qualified portion of the overtime. So for this year, your W-2 is going to look like this with nothing special about overtime. So employers are not required to separately report deductible portion of overtime on the W-2. Some employers are choosing to include the qualified portion of the overtime in box 14. To claim the deduction on your federal tax return, you will use a new form. It's called Schedule 1-A. And Schedule 1-A is going to include, deductible for it's going to include overtime. It's going to include tips. It's going to include the automobile interest deductions. So form a Schedule 1-A is where you are going to be entering all of that. Your responsibility. So you must make a reasonable effort to determine this amount yourself using pay stubs or other earning statements. Now for next year, for 2026, it will be a little more structured in box 12B. It's going to have the code TT, and it's going to have the qualified overtime portion of the pay. So just to summarize, overtime pay, just to clear the confusion a little bit. So under the One Big Beautiful Bill Act, employees can now claim a federal income tax deduction on a portion of their overtime. And again, the half portion. The deduction applies only to the overtime premium, the extra half in time and a half. And deduction limits are $12,500 for single and $25,000 for joint filers. It does not make overtime wages fully tax-free. Payroll taxes still apply, including on the overtime. So you will still be paying Social Security and Medicare. You will not be paying federal tax, but you will still be paying Social Security and Medicare. And this is a temporary relief, not permanent. And as I said earlier, things are changing, but this is definitely set in stone for the 2025 taxes. So let's talk about tips. Effective, it's also going to be effective 2025 through 2028. Employees and self-employed individuals may deduct qualified tips received in occupations that are listed by the IRS as customarily and regularly receiving tips. So, for example, if you're an accountant and self-employed, you can't tip yourself, obviously. So it has to be more of a service industry. And that's what they mean by qualified tips. There is a list to find out if your industry is considered a service industry. Qualified tips are voluntary cash or change tips received from customers or through tip sharing. For example, like a busboy who works at a restaurant, he doesn't necessarily receive a tip from the customer, but at the end of the night, all the waitresses, get together and split their tip with the busboy. So that's what they mean by that. Maximum annual deduction is 25,000. Now for self-employed, it cannot exceed your net income. And then again, it's phased out. The deductions phase out for taxpayers with modified adjusted gross income over 150,000 for single filers and 300,000 for joint filers. Deduction is available for both itemizing and non-itemizing taxpayers, which is always a good thing. Self-employed individuals in a specified service trade or business under Section 199A are not eligible. Employees whose employers in an SSTB are also not eligible. Taxpayers must include their Social Security number on the return and file jointly if married to claim the deduction. So if you're married, you can't claim the deduction if you file married filing separately. So just to summarize a little bit, because I know it's a little confusing, both deductions are below the line. And what that means is it's an expense subtracted from your adjusted gross income. It's available, both of them are available to itemized and non-itemizers. They both have basically the same limits, 25,000 for tips, it's 25,000 for all filing status. For overtime is 12,500. For single filers, 25,000. For married, they both phase out at about the same, and they're both in effect for about the same 2025 to the year 2028. I wanted to talk about enhanced deductions for seniors. And I see that I misspelled it there. So the deduction for seniors is 6,000 this year. I believe last year it was 12 or 1,500. And it was an extra, I think, 1,900 for joint filers. But this year it's 6,000 per senior, or 12,000 total for married couple where both spouses qualify. And by qualify, that means they're both 65 or older. Deductions phase out for taxpayers with modified adjusted gross income over 75,000 for single filer or 150,000 for married filing jointly. Taxpayers, again, must have attained age 65 on or before the last day of the taxable year. So they must have turned 65 by December 31st of 2025 and so forth. Deduction is available for both itemizing and non-itemizing taxpayers. They must file jointly, if married, to claim the deduction. Now, cars, it's a little tricky. Car loan interest deductions is in place for tax years 2025 to 2028. It's available to itemizers and non-itemizers. It's very important to pay attention to this. So the loan has to have originated after December 31st of 2024. It has to be a new vehicle, and you have to be the original owner. The taxpayer it has to be for personal use, so it has to be a private vehicle, and the taxpayer has to be the owner and the original owner of that vehicle. The cars that qualify are cars, minivans, vans, SUVs, pickup trucks, or motorcycles with gross weights less than 14,000 pounds. And the final assembly has to be in the United States. And the way to find out if your vehicle was, the final assembly was in the United States, it's very important to look at final assembly, because sometimes they'll bring parts from other countries, but it has to be assembled and finished in this country. You can go on to www.nhtsa.gov/VIN-decoder. And if you enter the VIN number, it will tell you where it was manufactured or where it was assembled. I apologize. Also, when you're purchasing the car, it will be in the paperwork there. The dealer will include that in the paperwork. But if you want to just know, a quicker way to find out is to go onto this website. So the loan contract, this will be in effect for loans originating as of January 1st, 2025, which is the same thing as after December 31st, 2024. And it goes to December 31st, 2028. So any loans that happen within that time period, the deduction limit is $10,000. The phase out rule is reduced by $100 of 1,000 of the Maggie or Magi. So the difference between AGI, adjustable gross income and Maggie is Maggie includes things like investment income and rental income and so forth. So that you have to keep an eye on that. So it phases out. Again, it fully phases out 150,000 for single filers, 250,000 for married filing jointly. This is Schedule A. This is where all the magic happens. This is where you're going to include the overtime, the tips, the car interest paid. So this is a new form this year. It will be included with the 1040. Now, the Trump account, there's been a lot of hype about the Trump account. Unfortunately, it launches after the close of the 2025 tax filing. It will be launching July 5th of 2026. You get you get $1,000 for every American child born between January 1st, 2025 and December 31st, 2028. The account is fully in your child's name, and you will be the sole custodian until the child turns 18. And the way to open the Trump account is when you're filing your taxes, you would enroll your child by making an election on your tax return. A financial institution or a bank, same thing, will receive the funds and activate the account. Obviously, they will contact you and give you the information. And then you have the option to continue contributing anytime. Now, at the bottom there's www.trumpaccounts.gov. I highly recommend you go on that website because it's kind of cool. It will show you like if you contribute 1,000 and your child is a year old, and then it will tell you estimate the value of the account when the child is 2 years old, when the child is 3 years old. I thought it was a nifty tool to have, so you might want to check that out. So now I'm going to move on to the Earned Income Tax Credits, EITC, and other tax credits. So the Earned Income Tax Credit helps low to moderate income workers and families get a tax break. If you qualify, you can use the credit to reduce the taxes you owe and maybe increase your refund. Basic qualifying rules are to qualify, you must have earned income, and I'll go over that, what earned income is later, have investment income below the limit, have a valid Social Security number by the due date of your return, including extensions, be a U.S. citizen or a resident alien all year, not file for the foreign earned income, meet certain rules if you are separated from your spouse and not filing a joint tax return. And basically what they're referring to there is, for example, if you're still married and your husband or your wife moved out over 2 years ago, you're allowed to file, even though you are married, and filing separately. So you would still qualify. These are the income thresholds for 2025. So by zero, you can claim EITC even if you don't have children. If you're head of household and your income is below 19,104, you can claim. If you have one child, these are the thresholds, 2 children, 3 children, and so forth. And then it depends on if you're single or married. All right, so types of earned income, basically wages. I'm going to summarize this for you to basically say you work, you get paid, that's earned income. If you have a house and you rent it, that's not earned income. So on the left is earned income. You know, you work from a job, gig economy, self-employed, you own or operate a business, you know, certain disability benefits qualify as earned income, and then non-taxable combat pay. Those all qualify as, are considered earned income. What's not considered earned income, if you know, people, so prisoner income is not considered earned income. Interest in dividends, pensions or annuities, Social Security benefits, unemployment benefits, alimony, and job support. To qualify for the EITC, a qualifying child must have a valid Social Security number, meet all 4 tests for a qualifying child, and in the next slide, I'll go over the 4 tests. Not be claimed by more than one person as a qualifying child. So these are the 4 tests. The child must be either any age and permanently and totally disabled, or under age 19, or under age 24 at the end of the year, and a full-time student. Your child must live in the same home as you in the United States. The United States includes the 50 states, the District of Columbia, any U.S. military bases. It does not include Guam, the Virgin Islands, or Puerto Rico. Basically, all the nice beachy places. Relationship, the child must be a son, daughter, stepchild, adopted, foster child, brother, sister, half-brother, half-sister, grandchild, niece, or nephew. Basically, you have to be the guardian, the parent or guardian for that child, legal guardian for that child. And then a joint return, if your child can file a joint return with another person, you may not be able to claim them. Your child can file a joint tax return only to get a tax refund on tax withheld from their paycheck. So there are other credits in addition to EITC. If you qualify for the earned income tax credit, you may also qualify for other tax credits, such as the child tax credit and the credit for other dependents, and child and dependent care credit. So the child tax credit helps families with qualifying children get a tax break. You may be able to claim the credit even if you don't normally file a tax return. So who qualifies? Your dependent generally must be under 17 at the end of the year, be your son, daughter, stepchild, stepbrother, stepsister, half-brother, and so forth, where you are either the parent or the legal guardian. Not provide more than half of his or her own support. So you must be the person providing more than half of their support, must have lived with you for more than half the tax year, can be claimed as a dependent on your return, not file a joint return for the year. This is the child now, where they cannot file a joint return for the year. They must be a U.S. citizen, U.S. national, or U.S. resident alien, and must have a Social Security number that is valid for employment and is issued before the date of your tax return. If you paid someone to care for your child or other qualifying person, so you and your spouse, if filing jointly, could work or look for work, you may be able to take the credit for child independent care expenses. So who is eligible? If you paid expenses for the care of a qualifying individual to enable you to either work or look for work. You or your spouse, if filing a joint return, live in the United States for more than half of the year. Who qualifies you for the credit? So if you have a child under the age of 13, a spouse or dependent of any age that is incapable of self-care and who lives with you for more than half the year. A lot of people ask the question, can I have my 18-year-old kid or my 17-year-old kid babysit my 12-year-old kid? And the question is, if you're going to claim the 17-year-old kid as a dependent on your tax return, then no. Additional tax credits. The child tax credit is generally a non-refundable credit. However, certain taxpayers may be entitled to a refundable additional tax credit. Taxpayers with more than $2,500 of taxable earned income may be eligible for the additional child tax credit if they have at least one qualifying child. Taxpayers with 3 or more children may also be eligible for additional child tax credit regardless of their income. It's limited to $1,700 per qualifying child. So this is credit for other dependents. There is a $500 credit for other dependents who do not qualify for the child tax credit. The dependent must be a U.S. citizen, U.S. national, or resident of the United States. The dependent must have a valid identification number or an ITIN. The $500 non-refundable credit is available for dependents who don't qualify for the child tax credit, such as children who are age 17 and above, dependents with other relationships, such as elderly parents, or children who do not have a valid Social Security number. Taxpayers cannot claim the credit for themselves or their spouse. So I don't know if I have time to talk about individual tax identification number.
Go ahead, Nagwa. Go ahead and talk about it a little bit.
Okay. I'll try to make it quick. So individual tax identification number is kind of like in place of Social Security number. The difference is you're not work eligible. Whereas Social Security number, in 90% of the cases, if you have Social Security number, you're work eligible. An ITIN is a tax processing number issued by the IRS for individuals who are not eligible to obtain a Social Security number, but still need to file a tax return. IRS issues ITINs to help individuals comply with the U.S. tax laws and to provide means to efficiently process and account for tax returns and payments for those not eligible for Social Security numbers. They are issued regardless of immigration status, because both residents and non-resident aliens may have U.S. filing or reporting requirements under the IRS code. ITINs do not serve any purpose other than federal tax reporting. So ITINs, you would not be able to use an ITIN to get a job, for example, or be issued a W-2. So who qualifies for an ITIN? Individuals, again, who are required to file federal tax returns but are not eligible for a Social Security number. They have a valid filing requirement or are filing a U.S. federal income tax return to claim a refund of withheld tax. U.S. resident alien based on the substantial presence test. Substantial presence test means how much time you spent in the United States over the last 3 years. And you can look it up in publication 519. who qualifies for an ITIN. Spouses and dependents must be listed on an attached U.S. individual federal tax return with the schedules or forms that apply to the allowable tax benefits. With an allowable tax benefit like filing a joint return, head of household, American Opportunity Credit, premium tax credit, child and dependent care credit, or credit for other dependents. Dependents who reside in Mexico, Canada, or U.S. nationals must use the same rules as U.S. citizens to determine who is qualifying dependent. Applying for an ITIN, fill out Form W-7. The Form W-7 has 8 sections that require information from the taxpayer, such as application type, submission reason, name, and so forth. And you would have to mail in your original documents, original passport, and so forth. An alternative to that, again, all right, let me backtrack. So you must complete the current Form W-7, attach a valid U.S. federal income tax return to pay or claim withheld taxes, and attach supporting documents to substantiate the individual's identity and foreign status. And all those have to be originals. Applying for an ITIN, these are the documents you would need: foreign status, identity, and Form 1040 return. Where to apply: you can apply by mail, you can apply in person, or you can go to a certified acceptance agent. And the processing time takes about 7 weeks. However, it's been delayed lately because at some point they stopped accepting application. So it takes 7 weeks for the IRS to notify you of your ITIN application status, and then an additional 9 to 11 weeks if you submitted the application during peak processing periods of your filing from overseas. The ITIN renewal process: only ITIN holders who need to file tax returns may renew their ITIN. Basically, you have to have a reason to renew the ITIN. If your ITIN wasn't included on the U.S. federal tax return at least once for the last 3 years, it becomes inactive. And by submitting Form W-7 and attach a U.S. federal tax return to renew their expired ITIN. A certifying acceptance agent is basically an agent. You go with all your documents. They help you fill out the W-7. They e-file it for you, and they verify that they looked at your documents and your documents are valid. So it negates the need for having to submit, mail in your original foreign passport. You just go to the certifying acceptance agent. They help you fill out the W-7. They look at your documents, verify these are your documents. And then they e-file the W-7. The certifying acceptance agent requirements is they must have a valid employer ID number or tax ID number. Organizations responsible parties must be a permanent full-time employee of at least 18 years of age and legal resident of the United States. CAA must be available year-round to provide services and answer questions. Organizations responsible parties must pass a tax compliance check and be current in filing and payment of any tax liability. They must complete an IRS mandatory training, and they have to adhere to spec, site, and quality requirements. Benefits of CAA is if your organization becomes a CAA, you play a critical role in helping individuals in your community meet their tax obligation. You can increase your client base. Offering ITIN services can attract more clients to your VITA site, expanding your reach and impact. It enhances your reputation, positions your organization as a trusted resource in the community, and also cost savings, provide no-cost tax services, saving families hundreds of dollars on ITIN processing. These are some of the resources you can look up. And with that, I would like to thank you all for inviting me back to present this again tonight this year.
Alrighty, thank you very much. Now I've got a couple of points I want to add to what you have already presented. In the case of ITIN, the certifying agent services cost money. So you will be charged for that type of service when you go to them. Alternatively, you can complete your own W-7 and then make an appointment with Internal Revenue Service, the walk-in unit, and then you can go there, they can certify your documents for you as well, and they will not charge you for that, and then you can bring your original documents home instead of mailing your original documents. I'll put a caution to that because when you're mailing your original documents and you know, for example, your passport, and you know you have a travel coming up, you want to be really, really careful in sending that because who knows when it's going to come back to you. It's only processed in Austin office. And so you can imagine how many passports and how many documents are there. You know, when I was a local taxpayer advocate, I've had to deal with situations where people have death in the family back home that they have to go, but their passport is locked up in the IRS area where nobody can trace it. It can create a lot of problems. So utilize the services of the certifying agents, or you can you can make an appointment and go to IRS walk-in unit around where you are, and then they can certify for you. We talk about EITC, right? Let me go through one or two common filing errors that we see in EITC. You know, claiming a child who doesn't meet the residency and relationship requirement is one of the top errors. Again, the requirement is you have to have a relationship with the person, and also you have to have a residency, meaning you reside with the person. If you are denying of EITC for this one of these reasons and you believe IRS is wrong, IRS may ask you to provide documentation showing that you reside with the person. And you can get that documentation from your doctor's office or the school that the child attend because it will always have the address and that have to match yours as well. Then we talk about relationship. You know, many times people will exchange kids because somebody advised them or some frivolous tax preparer advised them, oh, let me put another child on it for you. That is a fraudulent activity. And if you get a nab for that, that comes with penalty. You can have 2 years ban, you can have 10 years ban, and then you might also have criminal charges against you. So you want to be careful with that. You have to have that relationship with that child, a grandchild, you know, some kind of family relation with a child. Another one is married taxpayers incorrectly filing as a single or head of household. If you are married, your filing status is married, filing joint, or married, filing separate. That's it. Now, there are instances where you can file as a head of household. We talked about that earlier. If you have legally separated and like over 6 months, for tax purposes, again, it don't have to be um, IRS does not issue a divorce decree. It is the court that does that. But for tax purposes, IRS can recognize that. But again, everything they know in the IRS have documentation. You have to have documentation to prove or to support it. Incorrectly reporting income, particularly income and expenses from self-employment. Another error that you see a lot is incorrect social security numbers. You want to make sure your social security number is correct. And they're not claiming a qualifying child because the child is not a dependent. And so, example, full-time student under the age 24 who supports or who supported themselves. You have to be the one to support that individual. And so those are some of the few errors that we see when it comes to EITC.
So taxes, we talk about taxes every year. However, not everybody have a requirement of file taxes depending on the income that you make. And so if you're a single person this year, and this number changes every year. So this year, if you're a single person and you are under the age of 65, if you make 15,000 and above, then you are required to file taxes. Anything below that, you don't have that requirement. But sometimes it is to your advantage to file if you may get any of these credits that we mentioned. If you are 65 or older, your income is 17,000. If you make 17,000, you must file. Married filing jointly under the 65 years for both spouses, the income requirement is 30,000. 65 years or older, even if one spouse is 31,600. And then 65 or older, both spouses is 33,200. When you are married, filing separately, and then any age, if you make $5 or more, you have to file. Now, head of household, under the age of 65, the threshold is 22,500. 65 or older, 24,500. And then if you are your filing status is qualifying surviving spouse, then if you're under the 65 years, then your income is 30,000. And if you are 65 years or older, your income is 31,000. So those are the figures that will determine whether you have to file taxes or not. Always and always, if it's going to serve you, i.e., you're going to be able to claim any of those credits that is mentioned, then go ahead and take care of it. I'm going to now yield the floor to our colleagues from the Taxpayer Advocate Service. Ms. Mathis, Ms. Bailey, take it away. Taxpayer Advocate.
Thank you. Thank you, Mr. Ajete. Can you hear me clearly?
Yes, we can hear you.
Yes.
Okay, Ms. Bailey, are you on? Okay, so I'm just gonna start a little bit while Ms. Bailey gets on. And it's definitely a pleasure to be on here today. And a lot of what was already said was included in our presentation. So of course, we're going to skip over that. But as Mr. Ajete said, my name is Ms. Mathis, and I'm the local taxpayer advocate out of Brooklyn, New York. And Ms. Bailey is out of Manhattan. And what we do is I know in the beginning, some of the comments about the IRS, you don't want to be on the IRS bad side, or you don't want to have troubles with the IRS, but we are called the voice of the taxpayer, your voice at the IRS, because I know a lot of times it becomes difficult trying to navigate through the IRS with all the complicated tax laws and issues that might happen. And so we are your voice at the IRS. We are sort of like your liaison. You're trying to navigate your way through with the IRS and you can't get through. That's how Taxpayer Advocate exists. We exist to help you. We are here to help you until you get whatever the issue is, get it resolved. So some of the things we're going to talk about, they're basic things that you've probably heard before, but during this time, now that it's filing season, it's a good reminder, because even though they're simple things, if you make those mistakes on your tax returns, then it might get complicated trying to correct it. So it's a good habit to do the correct thing in the beginning. One of the things that we like to stress is that when you're filing your tax return, you make sure that you go to the correct place to file your return. There are various places that Ms. Nagwa in the beginning, she talked about with the VITA sites that can help you. If you need that assistance, make sure you go to those places because they are there to help you. We recommend that you e-file. Not everybody has that capability, but as much as possible, you e-file because it is a less chance of error that way. If you file a paper return, then there's the chance of your refund getting lost or stolen. The processing time is longer. So we really recommend, sorry, I was trying to find the right word. We really recommend that you e-file your tax return. A few reminders when reporting your income, make sure that you use all of your year-end income. It is always recommended that you use the forms that you get from your employer, like the W-2s and the 1099s. Because if you use your pay stubs, a lot of times all of the income is not there when you use your pay stub. Something might be missing, and if you use that and you file your return using that income, the income that is reported to the IRS checks, and it may be different, and then that would also cause a delay in your return being processed, and if you do a refund, in you getting your refund. There's always the option that you can access your tax records and view them online. It's for your personal IRS tax account. If you go on the irs.gov website, there is a link that will guide you towards being able to access your own IRS records. So that's one way for you to see what the IRS has on file for you, and you can able to view it and see if there's any errors. Do you need to make a call to anyone to try to correct them? That's one way for you to go and look at what the IRS has on file for you. Always, when you're filing your returns, always check and double check that everything is done properly. For example, the spelling of your name. I mean, it sounds simple. We know how to spell our names, but sometimes in a rush, we might type it wrong or write it wrong and not even realize it, and then file the return, and that can cause delays as well. You make sure you put down the correct Social Security number. That is such a huge thing in the taxpayer advocate. A lot of times the social does not match, and the taxpayer doesn't understand why they didn't get their refund. And when we do our research, that's one of the reasons. And then it's a lengthy process to gather the correct documents and make the corrections. So before you send off your return, make sure you check and double check all of the information that you put on there. I know Ms. Magwa talked about the one big beautiful bill, so I'm gonna skip over that. And some of the credits, make sure all of that, any credit that you're eligible for, that you go ahead and apply for those credits. They're there for your benefit, but just make sure that you are eligible for them before you apply for them. Again, this is one of the issues that we see a lot in the taxpayer advocate, that taxpayers file their returns and they claim credits, and then when the IRS does their review, we find out that the taxpayer is not eligible for those credits, and so their refund is being held up. And then the taxpayer wants to find out why they didn't get their refund. When we do our review, we find out that they may not have been eligible for the credits that they gained on their return. So make sure that it's accurate when you file that.
Good evening, everyone. Can you hear me?
Yes, go ahead.
Good evening, everyone. My name is Betsaida Bailey. Pleasure to be here with you guys. Thank you for the invitation. This is about my third or fourth year with you guys, so thank you always for having us. So I'm going to provide you guys with operational updates and key developments for the Taxpayer Advocate Service, effective as of today. So major updates, all offices have reopened. So we were shut down during the government shutdown. So we are back. We resumed operations and are, fully operational. So we're working through the backlogs and prioritizing cases involving financial hardship and critical emergencies. But service response times remain slower than normal while we catch up. So I just wanted to let you guys know that we were shut down and we have resumed operations. So working slowly. So if you do have a case with us, please be patient. But if it's something important that you need to get through, we will provide you with our information. And you could call also Mr. Ajete, and he will definitely connect you to us so that we could provide you with the assistance that you need. Um, Taxpayer Advocate Service received a funding boost for the 2026 federal budget. We received 7 million in funding to support identity theft casework, reflecting the ongoing concern about related refund issues. So please be wary, please be careful. Make sure that if you're going to a tax preparer to file your returns, that you're using someone that's reputable. Um, the prior speakers spoke about the correct social security number, so please safeguard your documents as there are a lot of scams. So be very careful, go to the VITA sites, CPA, someone that you know. If you're going to someone, if you're paying someone to get your taxes done, make sure you get a copy of the tax return and with a signature on it from whoever it is that you're paying. um Double check the banking information on your tax return to make sure it is it is your banking information and not the preparer's banking information. So just be careful with that because we continue to see an increase in the identity theft cases, so we have to be super vigilant on our end. Reports and advocacy priorities. The National Taxpayer Advocate released the mid-year report to Congress in June. And basically it stated that the 2025 filing season was largely successful in processing returns, but we do have ongoing concerns with refund delays due to identity theft and employee retention credit processing delays. So just wanted to bring that to your attention. The mid-year report to Congress also had recommendations for IRS modernization and staffing reforms to better prepare for future filing season. So talking about filing season, we are kicking off our filing season January 26th. Um, the 2026 filing season officially opens. So like I said earlier, make sure you're going to reputable organizations, corporations, um advocacy groups in the neighborhoods to get your taxes filed. For our objective reports for fiscal year 26, we have outlined research and systemic advocacy objectives, focus on IRS procedures that affect taxpayers, and recommendations to balance compliance with taxpayer rights. So taxpayer rights is always at the forefront of what we do because, as Ms. Mathis said, we are your voice at the IRS. Recent tax tips and alerts from TAS, electronic payment transition. The IRS with tax support is phasing out most paper refund checks and requiring electronic tax payments and refunds. You should make sure that you have a valid bank account information for direct deposit and refund. So we're cutting out paper checks to prevent the increase in refund theft. Last year we saw an increase in refund theft, and you guys may have seen on the news all a lot of the stuff that we have related to things with the post office and all the theft that is going on. So please be vigilant and safeguard your information. I want to provide you guys with a question on digital cash apps. We recently issued guidance urging taxpayers to correctly classify payment received through apps like Venmo or PayPal, because misclassification can trigger unexpected tax reporting and Form 1099-K issuance. So make sure you're using these digital softwares that the money is correctly classified so that you don't end up triggering 1099-K as a business transaction for things that may have been personal or may have been with family members. While not strictly tax news, as I said earlier, the 2026 filing season kicks off January 26th. But we do have staffing constraints and broader IRS budget concerns. So this continues to affect our service levels and response times across the agencies. We also have tax tips and blog from the MTA, and these are updated regularly on issues like estimated payments, W-2 timing, and disaster relief deadlines. Do you guys have any questions for us?
So before we go to question time, right, there are one or two things that I want to add to it, then we can officially move to question time. We talk about bank account for taxes or refunds. Very, very critical this year, folks. When we talk about check lost or check theft, is huge. I remember my time in taxpayer advocate where checks as much as $700,000 is gone. Nobody can trace it. Before I left taxpayer advocate, there was a check that we were doing a trace on it. It's about $4 million that I have to sign for a replacement. Those are the things that when you sign it, you just looking back and say, good grief, because it comes with all eyes on it from our level all the way to the level up there. And so it is a good thing for IRS and it's also a good thing for taxpayer. Now, it helps you to get your refund faster anyway. And so for that reason, I think this idea is a win-win. And for those of us who have worked in taxpayer advocate before, we saw how much money was lost during this COVID funds that was given. And some people even went to jail for that. Some people were prosecuted. And so it is really, really important for you to look into this bank account. Now, if you file your taxes and you don't include a bank account information on that, IRS will process the return. However, they're going to freeze the refund. They will freeze the refund and they will send you a letter at some point in time for you to add or update a bank information on your IRS online account. That means you also have to establish IRS online account. You're going to need ID mean to be able to do that. Now, you have 30 days to do the update. If the update don't come after 6 weeks, IRS is going to issue the return or the refund to you in a check form. So it's going to take a while. There are few exemptions in there. Number one, if you are a prisoner, you fall into the exemption of the paper check. Another one is also religious belief. Believe it or not every religion believe that you should have a bank account or you should bank in a financial institution. So there are few, I think it's four of them. And so if you are not within these constraints, you want to go ahead and have bank account so that you can get your refund. Another thing that we also have on the flyer is the offer and compromise program. Offer and compromise is a settlement-based program for IRS. Usually, it is people who owe IRS taxes that they cannot pay, pretty much. Now, if you have an asset, that asset have equity that will be put in play. And so if you have a house that have an equity of, let's say, $100,000 and you owe IRS $200,000 and you say, I cannot pay, IRS will look into your equity. We'll say, liquidate the equity, pay the 100,000 before we can even have any conversation. So that means you have money in something that is tied into something. But other than that, it's a very neat program. You go to irs.gov, there's a Form 656 booklet. In that booklet, you see 433A OIC, another Form 656. You it's also have the 433B, which is more in the business side, but you can fill this up yourself. IRS have a pre-qualifier on irs.gov. You can check and see if you qualify. And if you do qualify, you can settle your debt. So if you owe IRS 100,000 and you cannot pay it, and you say, Mr. IRS or Miss IRS, I will only be able to pay $50,000, you can go through the OIC process or the offer in compromise process and settle the debt that way. When the debt is settled and it's agreed upon or it's accepted, now you don't owe the 100,000 anymore. Now you owe 50,000. But but you cannot owe taxes for the next 3 to 5 years again. So it's pretty much we accept it, go and say no more, don't come back, don't get into that bad habit again, or don't owe taxes again. That is also there. Now, tax preparers or CPAs, when they prepare this form for you, again, remember they're just preparing the form. They cannot guarantee whether it's going to be accepted or not. They're charging between $3,000 to $8,000 just to prepare the form for you. And this is something that you can do online and do that form yourself. Now, even if your offer is accepted, you can still pay within 24 months or 6 months. So it's as flexible as it can be. So that is an option for you. Now, if you owe taxes and you cannot full pay, you can also get into installment agreement. You can set up installment agreement online, or when you file your taxes, you can complete Form 9465, which is installment agreement form in addition with your return, and you send it in. Remember, while you're in an installment agreement, your balance is still accruing interest and penalties. So keep that in mind. If you owe taxes $1,000 or more, you are required to do estimated payment. If you don't do estimated payment, you will be penalized for failure to do estimated payment. Now, in order for you to do estimated payment, you can go to eftps.gov. I put that in the chat room, www.eftps.gov. You set up account over there and you can pay through that. One more thing is scammers, and scammers. The scammers are on a very, very high alert, and they are calling people, they're scamming people, they're telling you that if you don't pay now, they're going to send a sheriff to your house and they're going to send this and that. That is not accurate. IRS does not send sheriff to your house. Yes, IRS does seize assets. And I had the pleasure to serve in that department. My young days, myself and Miss Mathis, yes, we have seized some assets for liquidation purposes to satisfy your debt. IRS will file lien or notice of federal tax lien on you. But that is pretty much about it. And before you even get to that level, you receive notices from IRS. So if somebody call you and they are posing themselves as IRS, a lot of times these folks are calling from foreign countries. They may have a very thick accent and they are very harsh. They want it now and they want it, and they terrify you. So when you start seeing some of these things, be careful. Now that we are going with deposit or direct deposit with your refunds, we don't know how they're gonna be operating, but I will not be surprised they'll be sending letters for you to put your bank account information. The only way to update your bank account information if you did not put on your tax return is through your online account. So far, that's what we have. Again, this may change, but this is what we have right now. So be careful out there. If somebody call you and they say you owe money to IRS, verify that, call IRS directly and verify that, walk into one of the walking sites, make an appointment with them and verify from IRS directly. It is better that way because a lot of people have lost several dollars of their money through this scam. So you want to be careful out there. If you are in doubt, reach out to IRS directly yourself. Again, IRS is there to provide you the services. You are a taxpayer, and so we are there to give you the services you need. Yes, if you're a bad character, then IRS is going to come after you. That one, everybody know that. But other than that, IRS is just like folks in the community. They are there to serve you and they will provide you the necessary help that you need to make sure your issue is resolved. The worst thing you can do to yourself is when you receive IRS notices, you will brush it aside and you wouldn't do anything with it. That is you causing your own doom. By opening that letter, read what it says. If you have any question, call, get clarification. That is the best you can do for yourself. But if you ignore that letter, IRS issues don't solve by itself. You have to take the action to resolve it. And so I will stop here and then go to the moderator for any questions that um, the congregations may have.
Oh, thank you very much. Thank you very, very, very much. Mr. Ajete, Miss Awad, Miss Bailey, and Miss Mattis, it's been wonderful. That's a lot of information. Thank you so much. In fact, to get such information, you might have to pay a lot of money for this, but you guys are giving it to us today for free. God bless you. Thank you very much. Brothers and sisters, the floor is open. If you have any question, please, you can raise your hands. But the first question came from Reverend Adonu. He says, I have SS number and my dependent have ITIN number. Can I claim these dependents?
Yes, you will not be able to claim them for EITC purposes and child tax credit purposes, but the other dependent credit, you'll be able to claim them, and that is up to $500.
Thank you very much, Mr. Ajete. So the floor is open, please. If you have any question, please, you can ask. You can raise your hands and I will call you.
And folks, one more thing that I would say, IRS is also going digital like any other company. You can go to irs.gov. I'm going to put in the chat, and then you can set up account. You can set up your own account. You need to go through ID.me for verification purposes to make sure that you are who you said you are. And then through there, you can print your transcript. You can print your wage transcript, your tax return transcript. You can see if you owe any money or you don't owe any money and things like that. So it's like like you banking, and when you do online banking, when you go there, you can see a lot of things about you. And we are also going digital. So you want to latch on to that. If somebody say you owe money and they call you and they say you owe money, guess what? If you already have account, you can go there and look at it yourself and see if you owe any money. If you need a transcript for financial aid or your kids' financial aid, you can print it yourself. You can print your transcript there yourself. So a lot of things are coming online, and IRS continuously adding more stuff online so that you can have a self-service at home. Many times taxpayers are not taking advantage of it, and they want to come to IRS office physically. I mean, if that is who you are, that is fine. That service is also there. However, if you can do it at home, why not? And so you want to take advantage of those things as well. We talk about VitalSite. VitalSite provide free taxes. We said the amount is about 69,000 plus. Instead of paying somebody to file your taxes for you, especially if it's a simple tax, you can get it for free. You can go to irs.gov and type in VITA, VITA near me, your zip code, and it will show you all the VITA sites close to you. They have their numbers there. You call them, they make an appointment for you. Some may have a walk-in, some is appointment based. Whatever is available, you call, set it up, you go down there, you get them your information, they file for you. People have the notion that if you go to a tax preparer and you pay a high fee, that's when you get a higher refund. There's no gimmick in refund. The refund is how much taxes were you paid in. For example, if you're working and you have uh, a high deduction on your W-4, your exemption, you have a 9 exemptions on your W-4. Obviously, small taxes is going to come out of your paycheck. However, at the end of the year, when you file your tax, chances are you're going to owe because you're taking more exemptions than what you really have. I use myself as an example all the time. I have 3 kids. right? I have 4 kids. One of them is older now. So I have 3 kids that I can claim. But in my exemptions, I claim zero, both state and federal. Why? Because it is better for you. I look at it as much better for you not to owe IRS, for IRS to give you a refund than you owing them when you have already spent the money. And that is where the troubles come. And so, if you're owing taxes year after year, you want to look at your W-4, maybe make some changes, take zero exemptions. At the end of the year, when you file your taxes, then you get to claim all your exemptions that you truly have. Chances are you're going to get a refund or break even, or if you owe, it's not going to be that much when you take high exemptions from the front end. So these are some of the few things. Also, your deductions, whether you're itemizing or you're doing standard deduction, it depends on what you have done so far. That determines how much refund that you're going to get, not the tax preparer who prepare for you. And so, you know, if a tax preparer is going to give you a higher refund, then you want to look into it very carefully. What are they putting on that I don't qualify for? You may have not attended college, but they put on the tuition credit and the tuition expense on it for you, and then you don't have it, or you didn't go to college in that particular year. And so when IRS pick that up, now you're going through audit, and then you're hot on the seat. The tax preparer already take that money and they're gone. Because remember, the more forms they file for you, the more they charge you. And so for them, it is to your benefit to put as much they want to put on to kind of juice your fund up for you. But at the end of the day, in a local tribe, in a local language, you say meji meji oni menyi menyi no nam. And so those who understand, you understand what I'm saying.
Mm-hmm.
Papa, I think there are many questions in the chat, so
Yes.
you can read them too for
Right.
Papa to answer.
So
Thank you.
we have a couple of questions. I think people are posting them. The first question says, please, are there tax breaks for people filing single or ways to not owe IRS after filing?
So ways to not owe IRS after filing is number one, making sure that you don't take that much exemptions on your W-4. Take zero. When you file, then you take your true exemption. So let's say you have 2 kids. That is one of the ways. If you reduce your exemption, then that is going to help you at the end. Another way too is if your income it go up and down or it varies, maybe what you want to do is have additional taxes taken out of your income or your salary. That way you have more bank in IRS. You can also do estimated payment yourself. You go through EFTPS and then you uh, do periodic payments and banking and IRS for you. But once you put it there, it's there for you to take a credit on it when you file your taxes. That way, you already have the money there. Especially if you're a 1099 employee or 1099 self-employed or independent contractor, because they don't take no taxes out of your pay. And so EFTPS can be your friend. As much as you do, you put um, a deposit there. For example, if your tax is $1,000, there are 4 quarters in a year. You divide that by 4. That's $250 per quarter. If the amount is going to remain the same, nothing is going to change. Chances are you're going to owe the same amount next year. And so you divide it by 4. Every quarter you put $250 there. By the time the year come to an end, you have put $1,000 there, and when you file your tax and it's $1,000, now you don't owe anything. Now tax breaks for single. We talk about the breaks numbers already. Now the breaks numbers is the same when you are filing joint, it's just the double. So whether you're taking standard deduction or itemizing, it come out to be is the same. It end up that when you are filing joint or head of household, you do come on top. But you have to look and see. Married filing separate, is that what is going to give you the best deal, or married filing joint? That's also, I have filed joint forever, and I see that that's more beneficial to me or for me. You can also look at that and see. But again, take less deduction exemptions, pay extra into it. New York, for example, New York, if you live in the city of New York tax city tax. Some company don't take city tax. And so you're already in the hole if you already have a high exemptions. So if you reduce it, they take more. Some may go into city tax for you. And then when you file your taxes at the end of the year, you don't have to pay that much.
Thank you very much. There we have there's another question. It says, please, are you aware of scam with people calling you that you are qualified for tax reduction when you are unaware of any such tax debt?
Yes, I am aware of it, and that scam is very, very high. There's all kind of scams out there. Like I mentioned earlier, if somebody call you with anything relating to tax, IRS usually will not call you. IRS will send you notices. The scammers have also jumped onto the notices game. When you receive a notice, examine it very carefully. Again, go to IRS, call IRS directly yourself to confirm what these people are saying. They will scare you to death. They will say they will send the marshals, and they will send the FBI. Again, we are in a very tough times, and so people are worried about different things, and so it's really, really scary. I'll give you an example. One time, my wife called me and said someone has called that we owe X amount of money, and she want the money now, on and on and on. And so my wife called me and I said, okay, connect the phone. The guy is on the call with us. And I said, how much do I owe? He mentioned a figure. I said, how much do you want me to pay you in 20s or in 10s or in hundreds? So I started playing the game along, right? And then finally, I told him, look, you're a scammer. I know you're a scammer, because if I owe money, I will be the first person to know from the time I file my taxes. So if you file your tax and you owe money, you'll be the first person to know. So if you get a refund or you didn't have to pay IRS, then you don't owe any taxes. So if anybody else call you and say you owe taxes, then it becomes questionable. And if you're in doubt, call IRS directly yourself. I'll put the IRS number, the 1-800 number on the chat. Again, if you call IRS, you might be on hold for a little while, but it is better than losing thousands of dollars to a scammer who have not done any work and will chop that money for free.
Thank you. There is another question that says, international students supposed to file for only school-related tax returns?
Ms. Bailey, you want to take that?
Okay.
Is Ms. Bailey on the line with us?
Yeah, I'm here. I'm gonna get back. I'm gonna go back to that. Go to the next question.
All right. So the next question says, Mr. Ajete, is there any way we can contact you later for education on tax when needed?
Absolutely. Absolutely.
Thank you. The next question is, what are the tax write-off if you are a business owner?
Okay, so if you're a business owner, it costs money to make money. So for example, whatever your business is in, you must have purchased ingredients, or you must have purchased something, what we normally call cost of goods sold. So all those expenses associated with that, making your money, you can deduct those returns. Now, there are instances where you can deduct meals if you have meetings with your your clients, in doing business, and you have to sit in a restaurant. You may be able to deduct some. Cars that you use, you can deduct mileage. If you use your home, a portion of your home, if you use your home, there's an actual calculation for that. You'll be able to use X amount of space that you use for your business. You pay electricity, you pay employees, labor costs is deductible. So there are so many things in there. It is not a one quick answer. What you don't want to do is inflate your numbers and not having records. Because a lot of time you can tell IRS I made $1 million. happy. IRS is happy for you. But when you say I had expenses of 800,000, 900,000, then IRS is like, let me look into this very carefully, because the more deduction you make, the less taxable income remains for the government to get their portion, you know. And so that is one thing you want to make sure you have records. Now, businesses, especially new businesses, the first 5 years, they may have a lot of losses. Again, have your documentation that every loss that you have, you will be able to support it should in case you get pulled for audit.
Thank you. The next question says, please, do you have to file your tax if you are on pension and you're still working?
Yes, if you are working and you are making money and taxes is deducted, or you do a W-4 and you are still making money, whether you're on pension or not, you're still going to have filing requirement. I mentioned the numbers to you earlier. I mentioned the numbers earlier. Uh, if you're making money, you have to pay taxes.
Thank you. The next question says, how do you report on an unused FSA or HSA funds? How do you report an unused FSA or HSA funds?
Ms. Mathis, Ms. Bailey, Nagua, is any of you going to take that?
All right, so whilst our panel prepares for those questions, we'll move on to the next one for sake of time.
You do not I'm sorry, you do not report unused FSA or FSH funds on your tax returns.
Thank you very much.
Unused money is not income. So I have the response to the question earlier with regards to international students. So
Yes.
the short answer to the question is no, not only school related returns. So international students, F1 or J1, M1 visa generally must file US tax forms every year, even if they have no income.
Thank you very much.
I have a response also to someone asked earlier about the transcripts. How long are transcripts available? So we have different types of transcripts, which Mr. Jete spoke about. So the transcripts availability by type. The return transcript shows the line items from the original tax return. These are typically available 3 years on the IRS website under your account, and these are used for income verification, financial aid, mortgage, and immigration. Account transcripts are normally available for 10 years, sometimes longer. The account transcript shows your filing date, payment and credits, adjustments to your accounts, balances due, penalties, and interest. These transcripts are normally used for taxpayer advocate service cases. If you're in collection, have an audit, identity theft, or refund issues. So this is the most useful transcript for problem solving as far as taxpayer advocate is concerned. Record of account transcript normally available for 10 years. And this shows a combination of the return and the account transcript. So this gives you a full picture of your tax. Wage and income transcript, which is your W-2 1099 transcript, shows your W-2 1099 social security social security income information, your banks and your payers. This is current year usually not available until May or June, and this is used if you have to reconstruct tax returns or an audit or you're a non-filer. Speaking of non-filer, we have the verification of non-filing letter. And this is current, this, you could get this transcript for the current year and the past 3 years. And this transcript shows that the IRS has no record of a return being filed. This is normally used for financial aid purposes for schools, lenders, as well as immigration. So in reality, some transcripts are available for 10 years, but they could be available for longer if you have an open balance, you're in litigation, identity theft, or taxpayer advocate is involved.
Thank you very much. The next question says, is it safe or risk-free for international students to file with just any company, or it should be specifically with Spring Tax?
Okay, so filing your return, Internal Revenue Service website do have a listing of reportable tax preparers. You can go there and punch in your zip code, and it will spill all the names and contacts of people or preparers that IRS has certified that these are people that you can use. So that is that. I will not, and none of our folks on the line will not be able to direct you to say, go to preparer A or B. That is a conflict of interest. And so for that reason, the answer to the question is you can file with anybody, but you want that person to be a reportable. You don't want an individual, somebody sitting in a corner. They're only there for tax season, and when the tax season is over, they're gone. Those are the folks we call them fly-by-night tax preparers. They're only around, they create all kind of mess for you, and they be gone. You can't find them. But you know, any return preparer of your choice, and if you want those who IRS has, you know, certified them or has agreed that these individuals are good or these companies are good, you can find that on irs.gov.
Yeah, as Mr. Jete said, we cannot recommend anybody. So you should ideally be looking for a preparer who has experience filing non-resident returns. Any something, resources approved by the school. The schools may have um sources where they could guide you to do that. Certified tax professionals or volunteer programs. You should be have a red flag for anybody who tells you that they should be filing a regular 1040 instead of the 1049 resident. Anyone promising you big refunds or stimulus money. Anybody claiming credit like the child tax credit or the earned income credit. Anyone that won't sign your tax return, or anyone that asks for payment based on your refund. So, these are red flags. It should trigger scams. Your spidey senses and your antennas should be standing on end. You have Mr. Jete here, you have us here as resources. So if you need further information or in doubt with anything, we are here for you as a resource, and that's why we will be coming back again every year to give.
I just want to chime in. Is it okay to chime in?
Yeah, go ahead.
So for non-resident filing the 1040 NR, yeah, we cannot recommend anyone. But the VITA sites, when you go look for a VITA site, they will they have posted whether they prepare non-resident tax returns. And also it will indicate on there if they are a certifying acceptance agent. So you can pick VITA sites that file 1040 NRs. And to just answer a previous, so when you go looking for VITA sites, look for a VITA set that does prepare the non-resident. And also if you want to apply for an ITIN, look for a VITA site that is CAA. But to answer one of the previous questions about someone said, would the IRS call me and tell me about tax refunds that I'm entitled to? And the short answer is no. The IRS does not call people to tell them that they are entitled to tax returns, to tax refunds that they are not aware of. So anytime, someone from the quote unquote from the IRS calls you, I would just hang up and call the IRS, like call the actual IRS, or go to one of their sites. So thank you.
All right,
Thank
so
you
one,
very
one
much.
more thing that I want to add, some tax returns can be complex. It depends on your situation. I don't know, and so I always say this. Your situation, yes, you can work with a tax preparer. That may be good, but your situation is something that he or she may not be good at. So you want to find somebody who understands your situation. Again, if you are sick, you go to the hospital. You don't go to a kinky seller. You go to a hospital. And so if your issue is complex, you find somebody who have experience in complex preparations. And so that is, and then you don't have to ask questions and say, hey, Mr. Preparer, have you dealt with such and such situation? Do you know what to do with it? And things like that, because you are going to pay them. So they are not doing it for you for free. You are going to engage them. It's a contractual agreement. And so you want to make sure they provide you the quality service and correct. That is above all. It had to be quality, it had to be correct. And so have that conversation with them. And if they're good, they'll tell you, hey, I'm not strong in this area. Maybe you want to go to such and such, or maybe you want to take it somewhere else. And I tell you this, a good return preparers, if they are not experiencing your situation, it is to their best interest, right? To direct you to somebody who do, because if they do it wrong, and God knows how many of situation like that he may encounter, it can also affect his practice, you know, because IRS is also penalizing tax preparers for filing erroneous filings, and so it will be of their best interest also to tell you the truth and say, hey, maybe this particular situation I'm not experienced there, and for that reason, this person may. Just like you have any issue. If you have a criminal issue, you don't go and hire a bankruptcy attorney because that's two different areas. The person is attorney, all right, but it's two different areas. And by the time you know, you're in jail when you shouldn't be because you're working with the wrong lawyer. All right, thank you.
Thank you very much. We have a couple of questions. I just want to go through it quick. Please, how can someone who is working under the table pay his tax? I think I saw somebody answering it saying that keep your money. Mr. Ajete, what would you say on this?
About ITIN, right? So the word working under the table, one thing come in mind, meaning you don't have a social security number. Now, if you could get an ITIN, right? ITIN is not to go and find employment, but then it's for somebody who have a tax filing responsibility. These two statements may sound like it contradict each other. Now, you may have a reason to file taxes if you are a non-resident and you're married to someone who's a resident or who's a citizen or a green card holder who may file taxes that would like to file as a joint return, whether husband or wife, it depends on who is filing. At that point, you may have a reason to file taxes. Now, if somebody employ you without um, social security number, but then you want to willingly follow the law, if you have an ITIN, you can report it with an ITIN, and then IRS is going to process it. In the future, if you do receive a social security number and you start filing with your social security, IRS can match the two and give you a credit for everything that was reported under ITIN so that when you reach retirement age in the future, you will be able to qualify for the quarters that is needed. The 40 quarters that is needed to qualify for Social Security. So it will not be lost, but then it will be merged to count towards your retirement in the future. Now, that will be the best way to address this issue to answer this question.
Thank you very much.
Now, Nagua had very, very experienced with Social Security because she used to be a Social Security employee before. And so, Nagua, you want to chime in on that, or um, the information given so far?
Well, we're working under the table is never a good idea. But the reason I'm a big fan of ITIN is we used to have people that came into the Social Security office who worked using an ITIN. And then when they eventually became employment eligible and got a Social Security number, at the Social Security Administration, we are trained to acknowledge their past earnings and give them credit for Social Security because you have to work a total of 10 years to qualify for Social Security benefits. And that's why I'm a big fan of ITIN. I don't want to say it's a loophole, but anytime people can work and be productive and pay into the economy, that's always a good thing for everybody. So yeah, the IRS does honor all the money you paid into Social Security under an ITIN. They will convert it over for you.
So the 10 years that she's talking about is the same as the 40 quarters. The 40 quarters will equal 10 years because you have to have that under your belt before you can draw Social Security for age base or retirement base. And that is why it is critical if you can get hold of ITIN, then you don't lose those. But remember, when you're working at the table and you are not paying anything, your payment or your salary or whatever you're receiving is not in the system anyway. So you're not building no credit towards Social Security when you get old, which can be dangerous because when you get older, of course, you don't have that much energy anymore. What you used to do now, you won't be able to do it. And then you're not getting Social Security or you're getting very, very peanut because majority of your work didn't go into the system and now you're drawing $120 whilst your friends who did the right thing from the beginning, they are taking $2,000 a month. You are taking 120 because you're only getting as much as you put in. And so I think is one thing that you want to look at. Now, in the past, I-10 is an IRS based thing. It have nothing to do with immigration or anything like that. I know some people may ask questions. Okay, how about if the administration is able to get hold of the I-10? Would they know where I live? Would they? I mean, all kind of issues, and people have legitimate concerns, which is it is what it is, especially around this time. But again, um, as long as I know or I remember, uh, IRS has not shared that information with um, what do you call it, immigration for any deportation purposes. But we're in a different times now. We're in a time that anything is possible. So whatever is not in the past, that's not necessarily mean it's not going to happen again. But it's one thing that you want to look at it, critically, but no, that information has not been shared with any administration for immigration and deportation purposes in the past. And so having one or applying for one um, could be a safe bet to protect your earnings or your payment, your credits for Social Security down the line when you get older.
Thank you very much. For sake of time, I just want to add these two questions and we can possibly wrap up. So it says, can a new business file tax even when it has not started making money from the business? And then, the same, it says, as a new business owner and I want to start filing for taxes, where do I start from?
All right. So the question of if I have not started making money, do I need to file? You know, you can file zero return. You don't necessarily have to make money. Once you have the filing requirement, you can file zero return. So that is number one. The second question that say, as a new business, where do I file from? That is not a straightforward answer. What type of filing requirement do you have? What type of business are you? I mean, the entity registration. Are you a sole proprietor? Are you a corporation? Are you a LLC? Are you a LLC single member? Are you LLC multi-member? Are you a partnership? Do you have 1065? The partnership is 1065 filing requirement. If you're a corporation, it's 1120 filing requirement. If you elect to be taxed as a small business and sub-elect to be taxed as a sub 1120, you have to file 1120S. You can file 1120S when you are LLC and you elected to be taxed as a corporation, and further elected to be taxed as a small corporation. And so it varies. When you did get your EIN number, it will ask you a series of questions. If you have employees, you have to file 941 quarterly basis. If it's less than 2,500, you have to file 944 at the end of the year. You also may have to file 940, which is the unemployment tax. That is also something that happens once a year. Your 1120, it is a C corp, meaning if there's a liability, the business pay for it. If you are a subchapter S, 1120S, it is a pass through, meaning all the liabilities and the gains will pass through to the owners. So if you have more than one owner, you're going to get your K1. And then if you have the partnership is 1065, that is just a information return. That is also a pass through. The losses and the gains will be shared to the owners or the partners in that case. They will also get a K1. What else? And so it's not a straightforward answer, but these are all the possibilities. One area that you can see is when you did get your EIN number for the business, it will tell you what your filing requirements are. Those can be the basic or the base one, and you want to follow that. If you have employees, you have to file 941. You have to file 940 at the end of the year. If you're C Corp, you file 1120. If you're subchapter S, you file 1120S. If you're a partnership, you file 1065. And so all those things are returns that will go to IRS. It depends on when they are due. I hope I have not thrown so much information at you at this question.
Yeah, thank you very much. It looks like we've exhausted enough. Please, there are some questions I wasn't able to read, but I saw our panel were just answering them. So if you didn't hear me, you can look on the chat and you could see that your question has been answered. Thank you very much. At this point, I would like
Papa,
to
please, there's one last question that I think he has to answer for us. That is, please, I started taking my Social Security this year, and I'm still working with my earnings. Will my earnings be changed after filing my taxes this year?
I assume the person is asking, is that the earnings of Social Security or the payment of Social Security?
I can take that. So even if you filed for your Social Security and you're receiving Social Security benefits and you continue to work after that, as long as you're paying into Social Security, your earnings will get adjusted every year.
Okay.
But
Thank
if you want to be sure, I mean, it will automatically get adjusted. You can walk into the office and say, I need my earnings recomputed, but you don't have to do that. They are automatically recomputed at the end of every year.
Thank you.
Thank you very much. At this point, I would like to call Ms. Delis Owusu to give us the vote of thanks, and we'll hand it over to our chairperson.
Thank you so very much. This has been a very informative session, and we are very appreciative May the peace of the Lord be with each and every one of you. Um,
Thank you.
First and foremost, I would like to say a big thank you to God Almighty for granting us life and wisdom and favor to be here today, having a very successful seminar today. We are very, very deeply grateful to our speakers, Mr. George Nikweku Ajete, Ms. Nawa Awad, Ms. Claudette Mathis, and Ms. Beseda Bailey. We are so very grateful for you guys to come and share your knowledge with us. You did not have to do it, but you came when we reached out, and we say God bless you so much for your time, for helping us to understand tax responsibilities while we are also honoring our principles and stewardship as a community. We also want to extend our sincere appreciation to the DSS organization for putting this together. We would like to also thank our chairperson in the person of, I think right now we have Papa Ofosu Ado as acting, but it's Reverend Bequin Apinting. And then we also want to thank our Presbytery clerk, Reverend Dr. Eukujampo, and Reverend Benjamin Ashong for giving us the prayer for tonight. We also extend our sincere appreciation for everyone who came today. We want to say a big thank you for participating, for your presence, for your engagement, and for your desire for this knowledge, because there was a lot of questions. So we know that you guys received it and you guys are going to use it in the near future. May God bless the work of our hands as He guides us to apply what we have learned. And we will all like to say thank you all so much for being here tonight, and God richly bless you. Amen.
Amen. Thank you, Mrs. Owusu. At this point, I would like to call Reverend Chumesi or DSS. Is there any announcement before we call for the benediction?
Then we have to ask the Presbytery clerk if there's any announcement for us, Papa. The Papa for
Reverend Dr. Awuku, Papa, please, if you're online, do you have any announcement or anything you want to say to us? I think he's probably busy. And once again, we just want to thank everyone for coming. Today we had a highest record of like 275 at one point, which is very encouraging. We hope we'll be able to do it next time and increase the number more. So at this point, I would like to call Mama Chumesi, any announcement from DSS, or we call for the vote of thanks from our chairperson?
Yeah, please, you can go ahead and call the chairperson to close us. Yes.
Okay, all right. Thank you very much.
Thank you for moderating it so well. God bless you.
Thank you, Mama. All right. At this point, I would like to call Reverend Appenton. I don't know if he's on the line, but his rep came.
Papa Ofosu Ado, the acting.
Papa, Reverend Dr. Ofosu Ado. I don't know if he's also on the line. I was trying to look for him.
Papa is on, please.
Oh, good.
I'm online.
Reverend Dr. Ofosu Ado, please, if you're online, can you please give us the closing remark and the benediction? Thank you.
All right. Thank you so much. It's been almost like about 2 hours plus of intensive education and the patience to go through this program, the insightful presentation that we have received. In fact, when we go through tax education, sometimes your mind is flooded with so many things that are sometimes technical, that are a bit complex. But because the persons that make the presentation are expert, they come to the level where maybe the knots are tied, the confusion is actually toned down, and we are able to make meaning out of what is presented. So I want to say we are grateful to Mr. Ajite and his team of experts that he will always assemble Award and Matters and Bailey for the insightful presentation, the time they devote. Notice that most of the things they say are their fingertips because they work with it and they have control over what they say. But at the moment, I can say that if I need to do a summary, I am told that tax education is crucial to assess IRS privileges and be very, very cautious also against tax evasion and the challenges that comes with it. I've also been notified that IRS has digital opportunities that you can use to monitor your progress instead of waiting for scammers to evade you and take huge sums of money that they are not supposed to take. We are also aware that it is good to resort to IRS advocates within your communities because their services are free and they are very helpful. While we contract tax agents to file taxes, it is helpful. Though it is helpful, it does not increase your benefits in any way. So if you are persons filing your taxes for you, it doesn't mean that because you have somebody you are paying to file your taxes, it means you are going to get huge benefits. And we have been cautioned to be mindful of scammers. Watch the red flags. IRS does not call for tax returns for somebody to file his tax returns. We must employ the services of advocates, service advocate, because they can help you to understand IRS complex regulations and navigate through the challenges. So the advocates are available and we can employ them because IRS matters are very complex. A lot of legal matters, a lot of regulation. So the advocates are always available to help us understand the complexities of their regulations and to navigate through the challenges. It has been wonderful. It has been insightful. It has been good. I am representing the Reverend Christian Bekwe as I deputize him in his absence. And I'm grateful for the privilege and the opportunity to do this. I want to express gratitude to Mama Doris, the DSS director, and the team of persons that work closely with her and to bring this insightful education every year. Dr. Opoku, I'm placing on record my gratitude for moderating the program also so well and bringing the session to a close. God richly bless all of you. Amen. And God bless all of us that have been through the program and to the end. The time sacrifice certainly will not go waste. God richly bless all of you. Can we share a word of prayer? Or is somebody there to pray?
No, Papa, please, you can go ahead. Thank you.
All right. Gracious God, you have granted knowledge to persons because that is their area of talents you place within them. That is why in this global arena, we have a lot of insight and education because people are specialized in so many areas that will be helpful for your church. And you say we must do good to all men, especially those in the household of God. Thank you for this gathering. Thank you for this annual event. Thank you that we are equipped with knowledge. Therefore, we'll be able to do the right things and be able to be guided through this process of complex matters. Thank you for the persons who assemble for the knowledge and for the disciplines they find themselves. I'm praying that day by day as we encounter experts, we increase our knowledge. And then we will render our services to society as we also render our services to you. Thank you. The night is fast spent. And therefore, as we go, may your presence always accompany us. May you bless IRS. Bless IRS as they and render services to get all of us in compliance. And so that the nation will also benefit and advance in development. That would be helpful for everyone. What is so thankful? Because we are prayed in the name of our Lord and Savior Jesus Christ, as we all share the grace together, saying, may the
The
grace of
grace
our
of
Grace
our
of our
Lord
Lord
Jesus
Jesus
Christ,
Christ,
The
the
love
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 of
of
Love of
God,
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 and the
and
and
the
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 fellowship
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 of the
of the
Holy
of
Holy
the
Spirit
Holy
Spirit
Spirit
Be with us
be with
now.
be
us
with us
and
now
now
us
and
and
forevermore.
forevermore.
forevermore. Amen.
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 Amen. God bless
Good
all.
night.
Amen.
Olajua.
Olacho, Olacho,
Amen.
Olacho.
God bless you,
Olaju
Papa.
Blimpley.
Good night.
And my job, Mr. Agiti.
Amen.
Mr. Jesse, I call Olacho, Olacho,
Olacho.
He has a lot
And
of
my
Bless
job,
you,
Mr.
bless
a
you.
Agiti.
lot of things in his
That's
mind.
your bone.
Yo, you might job when you watch them.
And my job, good night.
Good
Night. God
night.
bless
Amen.
you.
Okay.
Mhm.